Hi, this is Kerry Artak with Wicked Stocks and Artak Advisory, giving you an update in the U.S. dollar, that is the U.S. dollar index. I've been covering this now quite a bit for the last, few years, but especially over the last few weeks as this is a monthly chart worth remembering. This is the 2008 low. So this is not a daily or a weekly chart, but a monthly chart. And it was in January that we closed below, for the first time, an 18-year channel bottom that we're now back above. And so this is consistent, obviously, with what's happening in Iraq. Despite the fact that the U.S. dollar has lost its enamor over the last few years, it is still a safe haven currency. And so you've got institutions and governments and people, of course, flocking to U.S. denominated instruments for safety, as Asia and Europe are most, how should I put it? They feel the pinch with the oil prices more than the United States. So if the Straits of Hormuz stay shut down for an extended period of time, you're going to have China, especially Asia and Europe, face the possibility of a protracted recession because they're much more dependent upon Middle Eastern oil than the United States is. So there's that. So that is what's happening here. We're back above 98.51, and we're also above, I think, what is our upward pivot point into the second quarter, through the second quarter, really. This upper 90s, 98.51, 99.84, this descending channel top. I'm going to zoom in just a little bit here on the next chart and show it here. We're still only halfway through the month, but these same formations are drawn on weekly charts, so you could make the case that last week we settled above a critical resistance area, now support. Now, I don't want to jump the gun. This is a monthly chart. We could ease back and close below this area by the end of March, perhaps, or below 99.84, perhaps, which would fend off a significant buy signal. But as it stands right now, I'm going to call this a valid buy signal on the weekly chart and a tentative on the monthly chart. And because of the long-term scope of these moves, I do want to wait a couple of weeks to see where this plays out. But if we do close above 99.84, I'm expecting over the next, this could be a protracted, aggressive, short-term rally within, once again, monthly chart. So, 5 to 8 months, 5 to 8 bars up into this zone, that would be a blast to the upside. This could also take longer. This could take the better part of a year. So we'll see where that is. But bottom line, just know that the U.S. dollar looks to me like it's going to rally significantly through the second quarter, into the third quarter, if we close the month of March above 99.84. Until then, if we close below 99.84 and certainly back below the 98.51 formation, we are back into anticipating longer-term bearish continuation into the upper 80s. So we'll see where this plays out. I'm going to leave it at that for this particular update on the U.S. dollar index. You have a great day and a great week.